Hey, I'm Steven and this is Solving the Money Problem. If you're new, welcome. If you're not, welcome back. So once again, we're discussing ARK Invest. This time, a brand new blog post from CEO and CIO Cathie Wood entitled, Investors Beware, Stay on the Right Side of Change. While the title of this blog post may come across as somewhat alarmist, ARK Invest aren't trying to scare investors. This is basically just a public service announcement. Picture it like this. Today, from ARK Invest's perspective, the majority of stock investors are happily on board the Titanic with absolutely no idea that they're inevitably heading towards a gigantic iceberg. ARK's been up ahead. They've seen what's in the waters. They're zipping around in their speedboat trying to alert everybody who listen, hey guys, I'm not sure if you noticed, but you're going to be on the bottom of the ocean pretty soon if you don't listen to what we've got to say. And with that said, let's get into the video. But first, hey guys, if you live in the US and you'd like to help out the channel and get up to 4 free stocks, check out the link in the description to WeBull. If you open a new account, you'll get 2 free stocks between $2.50 and $250 each just for opening an account. And if you deposit $100, you'll get a further 2 free stocks valued between $8 and $1,600 each. That is an obnoxiously good return on your investment. I mean, really, deposit $100 and you'll end up with, at minimum, $21 worth of stocks, a 21% ROI on your money. And if you're in Australia, the UK, or New Zealand, you can get a free stock with stake also using the link in the description. Let's get back to it. Alrighty. Investors Beware, Stay on the Right Side of Change by Cathie Wood, Chief Executive Officer and Chief Investment Officer of ARK Invest. ARK's research suggests that the global economy has entered a period of convulsive changes, some exceptionally good and others devastating, that will shape financial markets for years to come. Thanks to seeds planted during the tech and telecom bubble more than 20 years ago, record-breaking technological changes are creating not only exponential growth opportunities, but also black holes in global economies and financial markets. Staying on the right side of change will determine success and failure not only in investment portfolios, but also in careers, companies, and countries. I just want to take a quick pause here to emphasize this point. It's not only investors who will suffer enormously by not staying on the right side of change, but as they point out, careers, companies, and even countries will either prosper or suffer enormously as a result of this. Where are the black holes associated with technologically enabled innovation? In our view, any company not investing aggressively in one or more of 5 major innovation platforms and 14 technologies evolving today will lose its way. In harm's way are companies that have spent the last 10 to 20 years engineering their financial results to satisfy the short-term demands of short-sighted investors. I just want to take a pause here. Now, I know this is just a reasonable thing to say, but it's also so savage. Satisfy the short-term demands of short-sighted investors. I would just like to add, short-sighted investors with short-term thinking are also, generally speaking, short on grey matter. Yeah, I did just say that. Deal with it. Those that have leveraged their balance sheets to buy back shares and pay dividends are at particular risk because deflation can ravage debt holders. Technologically enabled innovation is deflationary. Stretching for yield, fixed income investors have enabled this behavior and at some point will have to pay for it. Let me give you guys a couple of examples. Imagine you're an oil and gas company over the last couple of decades. Your goal is to bring investors on board. Your goal is to remain profitable. Your goal is to please your shareholders, blah, 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 blah. Of course, many investors have some reservations. It's like oil and gas, I don't know, man, that's f***ing up the planet, isn't it? Maybe, hey, it's better than a cigarette company. What's the dividend like? Oh, the dividend's pretty good. Okay, yeah, I'll just buy it, whatever, no problem. This has been going on for a while now. Rather than these companies investing that money that's been paid out as dividends, investing that in developing new technology to disrupt themselves, they've just been in cruise control mode. Those dividends, instead of being paid out to investors, should have been aggressively invested in energy sources, wind, solar, hydro, and also battery storage. All of the information was available. All of the numbers were there. We could already see that solar was declining in cost over time, that batteries were declining in cost over time. Put 2 and 2 together, you could see where this was heading. In fact, let me visualize this for you guys. You see this? You know what this is? This is the market capitalization in red of what was once the world's largest company by market cap, ExxonMobil. In black, Tesla's market capitalization. And by the way, you guys may notice this chart only goes up to the $400 billion mark. Tesla's around $200 billion when it crossed over ExxonMobil's market cap earlier this year. Tesla is now valued at around $600 billion. This is what disruption looks like. This is what value transfer looks like. This is what's taking place now as a result of these 5 disruptive, innovative platforms that ARK Invest continue to harp on about. As they say, you want to be on the right side of this change, not the wrong. Another example would be legacy automotive manufacturers who for the last 10 to 20 years, instead of pioneering electric vehicles trying to move the needle forward, they've been milking their existing highly profitable product lines. The internal combustion engine, it's not like it's 100 years old or anything. Yeah, this thing's going to keep working forever. Nothing's ever going to disrupt or replace this. No, just forget about it. Let's pay out some dividends, all right? Everyone happy? Great. The 5 innovation platforms that we believe will transform the global economy are DNA sequencing, robotics, energy storage, artificial intelligence, and blockchain technology. These platforms involve 14 technologies including gene therapies, 3D printing, cloud computing, big data analytics, and cryptocurrencies. Importantly, they cut across economic sectors, posing problems for research efforts that are short-term, siloed, and highly specialized. Just a quick shout out to all the Wall Street analysts who've been making calls over the last half decade or so that appear, in retrospect, to be colossally stupid and embarrassingly wrong. How did this happen? Siloed thinking. Oh, Tesla's an automotive manufacturer. Let's put them in the car maker box. Yeah, that's all they are, just a car maker. Now I could give you guys countless examples of this, but the point ARK is making is very critical. These technologies are converging and overlapping and interacting in ways that means having a single analyst who specializes in one industry is an absolutely moronic approach to understanding companies and the potential for the future. You must have interdisciplinary, overlapping understanding of all of the technologies involved in these companies and these industries, how they interact with each other, and how incredibly effective and potent they will be at changing the way things are done. In our experience, most research departments in the financial world are structured in that way and have created inefficiencies to exploit as convergences create the new world order. According to our research, among the siloed sectors at risk of disintermediation are energy, industrials, consumer discretionary, communication services, healthcare, and financial services. As autonomous transportation evolves, for example, autos, rails, and airlines are likely to capitulate to the convergence of robotics, energy storage, and artificial intelligence. Combined, they will collapse the cost structure of transportation. Traditional healthcare is likely to give way to the convergence of next-generation DNA sequencing, artificial intelligence, and gene therapies, the combination of which should boost returns on investment significantly, creating a golden age of healthcare likely to rival that of the 80s and 90s. Some of you guys will know I'm well and truly on board with this. I think that the revolution in genomics built on the back of DNA sequencing, artificial intelligence, and gene therapy are going to change everything. I've recently established a position in the ARK Genomics ETF, ARKG. I also have some options around that as well, which I've described in a little bit of detail in a recent video. I'll keep you guys posted on this, but I truly believe there's going to be a revolution in healthcare, medicine, and human longevity and well-being just around the corner. I think over the next 10 to 20 years, we're going to see an absolutely incredible, enormous explosion in the total valuation of the largest companies in these spaces. Mark my words. Meanwhile, traditional financial services are likely to commoditize thanks to application programming interfaces, APIs, social platforms, and blockchain technology that will enable the convergence of business and consumer marketplaces, disintermediating the middlemen dominating today's financial ecosystem. The convergence between and among innovation platforms and technologies seems to be throwing economic and company forecasts for a loop, particularly in the developed world, which is saddled with mature infrastructure. Broadly defined, the sectors at risk of disintermediation account for more than half of the S&P 500. Though at small bases today, in our view, most of the platforms mentioned above are entering exponential growth trajectories thanks to the falling costs and increasing productivity associated with technologically enabled innovation. For example, in response to the 28% cost decline in lithium-ion batteries for every cumulative doubling in units produced globally, prices will continue to fall, turbocharging electric vehicle sales. According to our research, EV sales will scale 20-fold globally during the next 5 years, from an estimated 2 million and 2.5% of the market this year to 40 million and 45% in 2025. Now, I know some of you right now are thinking, holy crap, Stephen, have you been sharing your weed with Cathie Wood? I'm not going to answer that question. And by the way, just in case there's any Wall Street analysts who are in the automotive space right now, you might want to pay extra special attention. Because I know right now in general, you guys and girls are completely off the mark to the point where it's going to be very embarrassing in a few years' time. So please listen carefully. This is exactly what disruption looks like. If it was predictable, if it was expected, if it was something you could intuit, it wouldn't be disruption. It would be obvious and inevitable. This is why the term disruption is used, because it is so disruptive, so unexpected, so surprising. So just on the odd chance that any Wall Street analysts are watching this channel, when you hear an outrageous statement that just doesn't feel right, like 45 million electric vehicles by 2025, and of course no one has a time machine, but when you hear such an outrageous prediction, but it's backed by research around disruptive innovation and the technology platforms that are enabling this, instead of being super dismissive when you hear these numbers that clearly seem outrageous, ask yourself the question, why is this crazy person saying these crazy numbers? Can I disprove this? Can I prove this? Can I try to get an understanding of where they're coming from? I can guarantee you, if you dig deep enough and don't just stay in your little box, throw away your preconceptions, use first principles, go from the ground up, try to understand what's happening, you may discover that these outrageous sounding predictions are actually likely to be on the money. Now I'll admit, this number, 45 million electric vehicles sold in 2025, to me, intuitively, sounds completely outrageous, absolutely ridiculous, just absurd. But here's the thing, when you're trying to understand disruption, innovation, exponential growth, declining cost curves, intuition is completely worthless. This is where you must engage your brain, look at the data and see where it leads. Now of course, ARK's predictions could be way off. Nobody has a time machine, nobody has a crystal ball, we'll just have to wait and see. But just for fun, I'd love to check the sentiment of those who are watching this video. So let me know in the comments below, approximately how many electric vehicles do you believe will be sold globally in the year 2025 and in the year 2030? If we are right, the good news is that EVs will generate exponential growth in the auto market for the first time in 100 years. The bad news is that just as rapidly, the more expensive gas-powered cars that dominate the market today will lose almost half their sales base. Moreover, if transportation goes autonomous, as we believe it will, the auto market will continue to shrink as the capacity utilization per car increases. So just in case you're not following ARK's line of reasoning here, if autonomy is solved in the next few years or any point in the future whatsoever, it means that there's going to be more robotaxis on roads, which are going to be doing more miles every day, actively moving people around, transporting people, rather than sitting in a garage or a parking space at somebody's office. This means overall, just in terms of numbers, there's going to be less vehicles needed to serve the same number of people. Overall, this means that the global vehicle market is likely to contract. How much? It's a little bit difficult to know. Maybe the market by 2030 has lost 10, 20, 30, 40, even 50 million units per year. Really hard to know exactly how much impact this will have. This depends entirely on how quickly autonomous vehicles can spread throughout the world and how effective they are. In other words, as measured by statistics born in the industrial age when the sector was nascent, auto-related GDP will drop dramatically in the years ahead as unit sales and prices suffer, all to the benefit of consumers. Not for 4 to 5 years should the exponential growth of EV sales stabilize the industry, albeit with a new cast of characters. So what exactly are ARK Invest getting at here? In short, the entire global vehicle market is going to collapse temporarily in a violent contraction until electric vehicle production capacity can be ramped up enough to meet global demand. The value of internal combustion engine vehicles is going to fall off a cliff in the next few years as more and more consumers realize that EVs have not only reached but surpassed price parity. They'd have to be financially insane to buy an internal combustion engine vehicle. Most consumers, not all, I know there's a few morons out there on this planet, I mean it is what it is. Most consumers will realize, oh hang on a minute, it'd actually even be cheaper, even though I want a brand new car today and I really want that immediate gratification, I'm smart enough to realize that it's probably going to be better off if I just take an Uber for the next few years and then buy a $25,000 EV in 2023 or so. This is what's going to happen. There is going to be an enormous contraction in the global EV market. Even really shit EVs are going to sell like hotcakes. Internal combustion engine vehicle sales will collapse. There's going to be huge amounts of bankruptcies, all sorts of debt going bad. I won't bore you with all the details on here. The point is this. There's going to be a massive contraction in the automotive market. This is obvious as hell. Here's a great way of visualizing this from JPR007 on Twitter. Don't get too bogged down in the numbers. Just visually, we're just trying to give a bit of a concept here. What we're looking at in black here is total sales of vehicles in grey, projections of internal combustion engine vehicles over time. Obviously by 2030, nobody with any sense will be making or buying these things, so they're basically 0% of the market in the future. Laid on top of that in blue is battery electric vehicle sales and their projections, and you'll notice this valley of death. This is what we're talking about. As ICE sales and production fall off a cliff, battery electric vehicle production will not be able to ramp fast enough, and this is where we see the huge contraction in the new vehicle market. It's only around here, of course these projections are just projections, but you can see the point. It's only around here that battery electric vehicles kind of get up to where the demand is. So until then, we're going to see huge amounts of financial pain, so many bankruptcies, so many companies going under, so many fire sales, acquisitions and mergers. It's just going to be a tsunami of hurt. I don't know any other way to say this. Meanwhile, consumers stand to benefit as the cost of transportation declines. Based on our research, as autonomous vehicle networks scale during the next 5 years, transportation costs will drop more than 50% from 70 cents per mile for personal cars to 25 cents per mile. More broadly, if our forecasts for the 5 innovation platforms are near the mark, nominal GDP growth in the US is likely to slow from 4.1% at an annual rate during the past 5 years to 2 to 3%, regaining momentum only after new technologies and solutions gain enough critical mass to move the economic needle. Both volume growth and inflation are likely to surprise on the low side of expectations as market share shifts to the mismeasured digital world and as the good deflation associated with technology takes hold. We believe the winners will win in a big way, but losers, particularly those that have levered balance sheets to satisfy certain stakeholders, will unwind. I just have to jump in here. Unwind is such a delicate term for completely fucking implode. While risk-free interest rates are likely to remain low, credit spreads could respond dramatically as disruptive innovation, the likes of which we have not seen since the telephone, electricity and the automobile burst onto the scene in the roaring 20s, caused significant dislocations. This terminology from ARK Invest is kind of hilarious. Unwind, significant dislocations. I mean, they're right, they're on the money. There's going to be some serious market trauma. It's just so understated. So, investors beware. According to our research, innovation is evolving at such a rapid pace that traditional equity and fixed income benchmarks are being populated increasingly by so-called value traps. Stocks and bonds that are cheap for a reason. Critical to investment success will be moving to the right side of change, avoiding industries and companies in the crosshairs of creative destruction and embracing those creating disruptive innovation. And perhaps another shot at the roaring 20s. I really have to say, ARK Invest and I definitely see eye to eye on this. The future is going to really be driven. The growth in the markets, in valuations of companies and in stock prices is really going to be built on these foundation of these converging, disruptive, innovative technologies. DNA sequencing, artificial intelligence, energy, robotics, and blockchain technology are going to cause a tsunami of hurt, but also create enormous opportunities for wealth creation for smart investors who are on the right side of change. Now you guys will know I don't give investment advice, but on the odd occasion, I do give how to not be a fucking moron advice. This is one of those moments. Please, don't be on the wrong side of this change. I'm Stephen Mark Ryan, this is Solving the Money Problem, and I love you all. And don't forget, if you live in the US and you'd like to help out the channel and get up to 4 free stocks, check out the link in the description to WeBull. If you open a new account, you'll get 2 free stocks between $2.50 and $250 each just for opening an account. And if you deposit $100, you'll get a further 2 free stocks valued between $8 and $1,600 each. And if you're in Australia, the UK or New Zealand, you can get a free stock with stake also using the link in the description. Thanks so much for watching. Let me know your thoughts in the comments below. And of course, if you have any ideas for future videos, let me know. I read all your comments. PS, if you're still watching, you're awesome. If you'd like early access, exclusive videos, regular Q&As, our private Discord server and more, consider supporting the channel at patreon.com/solvingthemoneyproblem so I can keep creating content for you guys. There's a link in the description. You can now also become a member of the channel for some exclusive perks. To learn more, click the join button next to subscribe. And don't forget to check out our merch store. Either way, the best form of support is you being here and watching, so thanks again.